Check, am I audible? ఉంటుందేంటి అంటే చెప్పేవాళ్ళకి తెలియదు కామెంట్స్ అవన్నీ. So yes, my dear students, today I am here with you with CA Inter Direct Taxation question paper. The question paper is moderate. MCQs are a bit tough, but if you think properly, you can solve them. But when it comes to descriptive questions, they are all very good as expected. So let us quickly start discussing MCQs. Before I start with disclaimer, those who are writing group 2, those who are having exam on 9th, please don't watch this explanation because your exam will going to get affected. That's why don't watch this. Okay. Those who are not writing group 2 and who are done with group 1 exams can watch this video. Those who are in group after all exams, then watch this video. Okay. This will be uploaded on my channel also. So let us discuss the MCQ. Mr. Gopal, aged 33 years, is a resident individual, sold one of his residential house properties for 60 lakhs on 31st August 2024, which was purchased. See, 31st August 24 means after 23rd July 2024, which was purchased on 14th October 21 for 45 lakhs. This question is highly expected. I told you, like there was an amendment after 23rd July 2024, indexation benefit was not available, but it is available in one exceptional situation. Okay, that exceptional situation was asked as first MCQ. His old tenant paid him rent in arrear for above said property on 12th November 2024. Like arrears of rent, they are taxable under house property. Total amount is not taxable, 30% deduction is allowed. He purchased a residential plot on 8th December 24. What is purchased? Residential plot means land. What is sold is house property. Reinvestment is made in land. Not eligible for exemption under section 54. Only residential house property to residential house property. Only that combination is eligible for exemption under section 54. Here reinvestment is made in land. So no exemption is available. But no construction was started till date, although he earned 30,000 as rental income from land. Rental income from land. This is taxable under income from other sources. It is not house property, vacant land. Okay, land was given on rent and earned rental income. Taxable under other sources. Gopal is opting for default tax regime. So he is paying taxes under default tax regime. Well and good. Cost inflation index for previous year 24-25 363, 21-22 317. Determine long income of capital gains. See, I told you in class, indexation benefit is not available while you are calculating income, but indexation benefit is available while you are calculating the tax liability. So let us see what is full value of consideration. It was sold for 60 lakhs. Indexation benefit not available while you are calculating capital gains. So cost of acquisition 45 lakhs. How much is long-term capital gain? Long-term capital gain is 15 lakhs. Why? Because it is long-term capital asset purchased in 14th October 21, sold in 31st August 24. Period of holding greater than 24 months. So it is treated as long-term capital asset. Long-term capital gain is 15 lakhs. From this, can we claim exemption under section 54? Exemption under section 54 is not available. So net long-term capital gain is 15 lakhs. Why exemption is not available? Because reinvestment is not done in residential house property, but reinvestment is done in land. Okay. So what is the answer? Answer is Long-term capital gain of 15 lakhs after no exemption. Next question. Compute income from house property. 75,000, from that deduction at the rate of 30%. How much? 75,000 into 30%. 22,500. How much is balance? 52,500. Next, assuming Mr. Gopal has no other income, compute his tax liability. See, at the time of calculating tax liability, you have two options. You can claim indexation benefit and calculate the tax liability at the rate of 20%. Second option, you do not claim indexation benefit and you will calculate tax liability at the rate of 12.5%. First, without indexation, let us do. Without indexation. First of all, how much is gross income? Without indexation, capital gain income is 15 lakhs. Income from house property, how much? Just now we have calculated 52,500. How much is other income? Other income is 30,000, correct? So total income will be 15 lakhs plus 52,500 plus 30,000. 15 lakh 82,500, and he is paying taxes under default tax regime. Under default tax regime, irrespective of age, irrespective of residential status, basic exemption limit available is 3 lakh rupees. Am I correct? So, like out of 15 lakh 82,500, capital gain is 15 lakhs, other income is 82,500. So out of 3 lakh rupees basic exemption limit, first priority should be given to other income. So less basic exemption limit, how much? 82,500. So balance after reducing 82,500, how much is unexhausted basic exemption limit? Unexhausted basic exemption limit is equal to 3 lakh minus 82,500, 2 lakh 17,500. That you will adjust with this. How much are balance long term capital gain? 12,82,500. So 12,82,500, when it was sold after 23rd July 2024. So tax rate applicable is 12.5%. 12,82,500 into 12,500, 1,60,312.5 plus HEC at the rate of 4%. 6,412.5. Total 1,60,312.5 plus 6,412.5, 1,66,725. Next, with indexation benefit. Full value of consideration is 60 lakhs. If you take indexation benefit, indexed cost of acquisition. What is the formula? Cost of acquisition into cost inflation index into in the year of transfer divided by cost inflation index in the year of purchase. It was purchased for 45 lakhs. Year of transfer 24-25 363. Year of purchase 21-22 317. So 45 lakhs into 363 divided by 317. How much? 51 lakh 52,996.85. So how much is long term capital gain? 60 lakh minus 51 lakh 52,996.85. Long term capital gain is 8,47,003.15. I am taking it as 8,47,003 rupees, or you can take 8,47,004 rupees anyway. So long term capital gain 8,47,004 rupees. Income from house property, how much? Same, right? 52,500. Other income 30,000. So how much is total income? Total income is 8,47,004 plus 52,500 plus 30,000. 9,29,504. Out of this, capital gain is 8,47,004 rupees. Other income is 82,500. Correct. Next, default tax regime basic exemption limit available is 3 lakhs. First priority should be given to other income. You will set off other income. How much is unexhausted basic exemption limit? Unexhausted basic exemption limit is 3 lakh minus 82,500, 2 lakh 17,500. So how much is long-term capital gain? Minus 8,47,004, 6,29,504. Tax rate 12.5% plus HEC 4%. That means overall 13%, right? HEC is calculated on tax amount. So tax will be 13%. Tax at the rate of 13%. 629,504 into 13%. Hold on. Sorry, the tax rate applicable is not 12.5%. If you take indexation benefit, the tax rate is 20%, right? Tax at the rate of 20%. How much? 629,504 into 20%. 1,25,900.8 plus HEC at the rate of 4%. 5,036.03. So total 125,900 plus 5,036. 1,30,936 rounded off to 1,30,940. So this is the correct answer. Next, Mr. Shivam, a resident individual, has made following payments to Merces ABC Limited to purchase overseas tour program package. So see, whenever you are purchasing overseas tour program package, if value of package from all operators together is up to 7 lakhs, TCS 5% will be collected. If it is more than 7 lakhs, 20% TCS will be collected. 4 lakhs, that means this is less than 7 lakhs. 4 lakhs into 5%, how much? 20,000. Next, 5 lakhs. Out of 5 lakhs, total available is 7 lakhs. For case 1, already 4 lakhs was used. So case 2, 5 lakhs. Out of 5 lakhs, for 3 lakhs, you will apply 5%, and for 2 lakhs, you will apply 20%. So 4 lakh into 5%, 20,000. 3 lakh into 5%, 15,000 plus 2 lakh into 20%, 40,000. 55,000. So 20,000 plus 55,000. This is the correct answer. Next, on 18 June, unexplained money 30 lakhs. See, from unexplained money, no expenses are allowed as deduction and no losses are eligible to be set off. This is fully taxable. Tax rate applicable is 78%. 115 BBE, it will be treated as deemed income. For deemed income, tax rate applicable is 78%. 30 lakhs into 78%, 23 lakh 40,000. Next, case scenario 2. All good kada? Mr. Satya, aged 59 years, is a resident Indian opting for optional tax regime. Okay. And provided the following information: profit from specified business 6 lakh rupees, loss from trading of equity shares 50,000, and from trading of commodity derivatives. See, commodity derivatives, it is not a speculative business. Commodity derivatives is not a speculative business, but trading of equity shares can be speculative business. Next, he took loan of 40 lakhs from SBI for purchasing a house, stamp duty value of which is 42 lakhs in January 2022. See, when loan was taken in January 2022. That means loan was taken in previous year 21-22. If loan is taken in 21-22, deduction is available under section 80EA up to rupees 1,50,000 because stamp duty value is also less than 45 lakhs. Is it clear? Next. He has let out this house in February 24 for rent of 15,000. Careful, February 24 means previous year 23-24. In 23-24, it was let out for 2 months. In 24-25, it was let out for total 12 months. You need to calculate rent of 12 months. Many students may commit mistake here. He has paid 1,60,000 against principal. See, this is eligible for deduction under section 80C, but maximum deduction allowed is equal to 1.5 lakh. Correct? And 4,40,000 against interest during previous year 24-25. So this is eligible for deduction under section 24B and also eligible for deduction under section 80EA. Loss from betting on horse races. See, whatever the loss from horse races is there, such loss is dead loss. You cannot set off such loss. Okay, so that loss will be treated as dead loss. Based on above information, answer following MCQs. What shall be gross total income? Okay, let us calculate gross total income. How much is specified business income? Specified business income is 6 lakh rupees, correct? And speculative business loss. Speculative business loss can be set off only against speculative business profits. It cannot be set off against non-speculative business profits and specified business profits. And whatever 75,000 is there, it is non-speculative business loss, so it can be set off. Less non-speculative business loss. How much? 75,000. So net PGBP income is 5,25,000. Okay, loan was taken. How much is rental income? 15,000 per month. Let us calculate income from house property. How much is gross annual value? 15,000 into 12, it will be 1,80,000. Am I correct? From this, we are going to reduce municipal taxes. Municipal taxes are not given. Net annual value 1,80,000. From this, we are going to reduce standard deduction. Standard deduction is 30%. 1,80,000 into 30%, how much? 54,000. So how much is available? 1,80,000 minus 54,000. 1 lakh, still 1,26,000 amount is available. How much is total interest paid? Total interest paid is, it was given total interest paid is 4,40,000, right? The total interest paid 4,40,000. Out of 4,40,000, 1,26,000 I can exhaust here, correct? So 1,26,000 income is available, income from house property. I will set it off against it. And 1,50,000 I will claim as, hold on. We are paying taxes under optional tax rates. Under optional tax rates, maximum 2 lakh rupees loss is eligible for interhead set off. Am I correct or not? So, I am having PGBP income of 5,25,000. Even though 5,25,000 PGBP income is there, maximum loss from house property that I can set off is 2 lakh rupees. Am I correct or not? So, I will set off loss from house property against PGBP income 2 lakh rupees. Next, how much is balance available? 4,40,000 minus 1,26,000 minus 2 lakhs. 1,14,000 is available. This I will claim as deduction under section 80EA. So whatever the total interest paid is there, that I have allocated like this. Income from house property I can set off 1,26,000. Okay, so and 2 lakh rupees, whatever the loss eligible for interhead set off, that also I can set off. So 1,26,000 plus 2 lakhs, how much? 3,26,000. I will claim deduction under section 24B, 3,26,000. In that case, my loss from house property will be 2 lakhs. So I will set off my loss from house property. After set off loss from house property, my gross total income is 3,25,000. From this, I am going to claim chapter 6A deductions. 80C 1,50,000, 80EA 1,14,000. How much is my total income? My total income will be 3,25,000 minus 1,50,000 minus 1,14,000, 61,000. So, gross total income 3,25,000. Total income is 61,000. I hope you got the answer. Gross total income 3,25,000. See, the gimmick is like is there in allocation of interest. You need to allocate interest properly, then you will get the correct answer. Which statement is correct in respect of losses to be carried forward in next assessment years? Loss from trading of equity shares. This is speculative business, right? Speculative business loss can be carried forwarded for 4 years. Commodity derivatives, non-speculative business, that can be carried forwarded for 8 years. But here he has given 4 years. This is not correct. Trading of equity shares 50,000. Betting, loss from betting is dead loss. You cannot set off. You cannot carry forward. This answer also wrong. Here also betting on horse races. Loss from horse races you cannot carry forward because that is dead loss. This is also not correct. So the ultimate correct answer is D. So these are all MCQs. Now let us start decoding the question paper. So this is total income problem. I have made one video on total income problem. Majority of the adjustments came here. I am very happy. So Mrs. S.C. Bose, a widow of public sector employee who died during service in 2011, she earns income from business of running a flower bouquet at Kolkata. She is also earning royalty income. Royalty income taxable under other sources. Income from flower bouquet shop, that is taxable under PGBP. Opening stock, purchases, salaries, expenses relating to books authored by her. See, royalty is taxable under other sources, right? Expenses for royalty is also allowed as deduction under income from other sources. So this is not allowed as deduction, that is to be disallowed. Expenses in connection with dividends. See, dividend income is taxable under other sources, right? So expense in relation to dividend is also allowed as deduction under other sources. This is also to be disallowed. But under other sources, from dividend income, no expenses are allowed as deduction except interest expenditure. Here, interest expenditure was not specified. If interest expenditure was given, 20% of dividend income or interest expenditure, whichever is lower, will be allowed as deduction. Here, expenses in connection with dividend, that is not allowed as deduction under other sources. Repairs and maintenance, amount paid to IIT Chennai, that is also allowed as deduction under section 35. Computer and other electronic items, this is capex, right? Whether capital expenditure is allowed as deduction? No. But you can claim depreciation on capital expenditure. When it was purchased 1st December, that means put to use less than 180 days, you need to calculate half rate of depreciation. Family pension, this is taxable under other sources. Royalty income, this is also taxable under other sources. Dividend, other sources. Interest on fixed deposit, other sources. So All these incomes are to be disallowed. They are not taxed under PGBP. Correct? Next, purchases include 2 lakhs related to flowers and creepers directly purchased from a farmer in cash. When you are purchasing agricultural produce, even if you make cash payment of more than 10,000 rupees, it is allowed as deduction. Repairs and maintenance includes one-time deposit of 2 lakh paid to electricity and water department. This is deposit, that is not expenditure, so that is not allowed as deduction. Computer and other electronic items include 1 lakh paid for television. See, this is also capex, right? Not allowed as deduction. But for television, rate of depreciation is 15%. For computers, rate of depreciation is 40%. Salaries and wages includes salary paid 2,40,000 to her illiterate brother. Excess payment made to relative not allowed as deduction as per 40A2. So how much is disallowed? 60,000 is disallowed. She purchased a residential house 110 lakhs for which loan of 75 lakhs was taken from SBI. Accrued interest was 3,37,500 which was paid on 10th April 25. No principal amount and interest was paid. Ground floor of the house was used for shop. That means only half of the expenditure is eligible for deduction under section deduction under PGBP. Balance is used for residence. So that is self-occupied property, right? So expenditure related to self-occupied property not allowed as deduction under PGBP. She purchased electric vehicle. Rate of depreciation 40%. 30th September put to use greater than 180 days. She sold 10 lakh listed equity shares. So this income is taxable under the head capital gains. Next, Mr. Mahesh received dividend of 7 lakhs declared and paid by a foreign company outside India. Such dividend has been declared in respect of shares. I told you second question will come from residential status. From residential status only question was asked. So we need to tell whether income is taxable or not. So Mahesh received 7 lakh rupees dividend from a foreign company. Such dividend has been declared in respect of shares which derive their value substantially from assets situated in India. He is RNVR. In case of RNVR, Indian income is taxable. Foreign income from business controlled from or profession set up in India is taxable. So whatever dividend of 7 lakhs is there, that is not taxable for RNVR because 7 lakhs is paid by foreign company. It is foreign income. Foreign income is not taxable for RNVR. Shivans is a non-resident in India and residing in China, has deposited 16 lakhs in Merces ABC Limited, an Indian company, on 1st September 2024. See, he is non-resident, residing in China. He deposited in Indian company. If income is received from Indian company, it is Indian income. Once it is Indian income, it is taxable for all, whether he is resident or non-resident. Ramesh received royalty of 8,25,000 in consideration of providing patent rights to Mr. Sunil. Mr. Sunil has developed a new product in India by utilizing patent rights. 30% of royalty was received in India, 70% royalty received outside India. Where patents are used? Patents are used in India. So royalty will be deemed as accrued in India. If royalty is deemed as accrued in India, it amounts to Indian income. It is taxable for all. Next, I told you I have made one video must revision chapters, and I have also told you first question will come from total income. In second question, first part will come from residential status, second part will come from TDS. Same in that manner only questions are being asked. In second question, second part was asked from TDS, first part was asked from residential status. So Mark Pictures is a movie and short films production house, turnover 15.22 crores during 2023-24. Solar Varanasi Limited also produces short films and clippings, and it has already produced a short film, namely Mahakum, on 16th October, acquired television rights. The acquisition means what? For the it amounts to sale. If it is sale, TDS is not required to be deducted under section 194C. Only if it is works contract, then only TDS is required to be deducted under section 194C. Mr. Mayank, a salaried individual, paid rent. Salaried individual having PGBP income. So he paid rent in Mumbai. Amount of rent paid is greater than 50,000. So TDS is required to be deducted under section 194 IB. TDS required to be deducted under section 194 IB. So how much? March month rent. From last month rent you have to reduce TDS 1 lakh rupees. TDS from April to September TDS rate is 5%, correct? April to September 75,000 into 6, how much? 4,50,000 into 2%, sorry 5%. October to March 1 lakh into 6 into 2%. Here 4,50,000 into 5%. You can calculate TDS amount accordingly. Okay, that's the answer. Next, Mr. Sandeep, manager in CTL Private Limited at Mumbai, furnishes following information. First, check whether default tax regime or optional tax regime. Total income assuming he opted out of default tax regime. That means he is paying taxes under optional tax rates. Basic salary, fully taxable. Commission is also fully taxable. Company owned accommodation. That means what? Rent-free accommodation owned by employer. And accommodation is provided in Mumbai. So taxable value is equal to 10% of salary. Furniture was also provided. Furniture was owned by employer. So 10% of 2,40,000, 24,000 is taxable. Personal loan 3 lakhs was taken. Rate of interest 7.75%. But market rate interest 12.75%. 12.75% minus 7.75. How much? 5%. So interest rate benefit is 5%, that is taxable. He occupied 1 unit of his residence and 3 units were let out at a rent of 20,000 per month per unit. The municipal value is 9 lakhs and municipal tax was paid at the rate of 20% of municipal value. So you can calculate income from house property. It's easy only. Next, discuss taxability with reason in hands of recipient. Ram received 5 lakhs from his father. If amount is received from father, it is gift received from father. Father is relative. If gift is received from relative, that is not taxable. Correct? Govind sold his house property to Mrs. Radha for 1 crore 25 lakhs, where value determined by stamp valuation. That means stamp duty value 175 lakhs. Actual consideration 125 lakhs, correct? Now stamp duty value should be compared with 110% of actual consideration. 125 lakhs into 110%, 1 crore 37 lakh 50,000. So stamp duty value greater than 110% of actual consideration. Full value of consideration is equal to stamp duty value is equal to 175 lakhs. Agastha got a gift of car. See, car value is greater than 50,000, but car is not covered under the definition of property. So whatever the car received is there, that is not taxable. In day before exam strategy, second priority should be given to clubbing of income, set off of losses and agricultural income. I told if a question comes like weightage is very high, you can revise set off of losses very quickly. You can see 6 marks question is asked from set off of losses. Super. Loss from futures and options. Futures and option is not speculative business. It is non-speculative business. Next, profit from restaurant business. So you can set off like loss from options and futures with profit from restaurant business. Share of profit from partnership firm, that is not taxable, that is exempt. Income from salary. Interest on loan paid for self-occupied property. Option to shift out of default tax regime. That means he is paying taxes under optional tax rates. So that is allowed as deduction under section 24B. and principal amount eligible for deduction under section 80C. Short term capital gain 82,000, long term capital gain, long term capital loss. Long term capital loss you can set off against long term capital gain. His wife received salary of 2,40,000 from a partnership firm Excel & Co, where she has an accountant. She does not have any professional qualification. If she is not having any qualification, 2,40,000 is clubbed in the hands of husband. He paid 21,000 medical insurance premium, 9,000 for preventive health checkup. What is his age? 32, less than 60 years. So maximum deduction allowed under section 80D is equal to 25,000. Correct? I told from return of income, definitely one theory question will come, and that theory question has come. Okay. So overall the paper is easy, but in certain cases he definitely gave tough, but you can easily score good marks in this paper. Certain areas were given tough. Of course, in every exam certain questions he will ask tough, but it is not so much difficult. You can write the paper easily, you can score some 40 to 60% can be scoreable. Okay, so that's it. Thank you very much.